Hi dear traders! This trading week was short for US traders because of Thanksgiving Day. While the US was celebrating the holiday, buyers of the euro and the pound sterling were trying to find quite strong reasons to recoup losses. Thus, the US dollar dropped after the publication of the FOMC meeting minutes. In our video review, we will find out what events will shape the market sentiment early next week. On Monday, traders will get an important fundamental report as early as the Asian-Pacific trading session. Australia is going to disclose its preliminary figures on retail sales for October. Since economists expected a decline of 1.4%, traders will get a reason to sell the Australian dollar. A drop in retail sales could be explained by the same factors as in other countries, namely high consumer prices and rising interest rates. What's more, news about lower consumption will act as a signal for the Reserve Bank of Australia to slacken the monetary policy tightening. This in turn will sap demand for the Australian dollar. Meanwhile, traders of the euro will get important macroeconomic data only from Tuesday. Thus, Germany will publish its initial estimates on the annual inflation growth. Since Germany is the main Eurozone economy, the inflation figures will reflect the overall situation in the euro region. Judging by analysts' assumptions, traders will get mixed information. On the one hand, inflation is expected to slacken. On the other hand, the slowdown is likely to be insignificant. That's why traders may start to sell off the euro. Data from Canada will neither encourage traders. On Tuesday, the country will issue a report on its GDP growth rate. In the third quarter, Canadian economic growth is likely to slacken to 0.4% on a quarterly basis. In the last few quarters, commercial inventory and consumer spending were rising. However, preliminary estimates unveiled a slowdown in these indicators. In addition, foreign demand may also fall amid signs of a global recession. Although the Bank of Canada continues its monetary policy tightening, the Canadian dollar may lose its position against the greenback amid such information. The approach of the global recession could also be confirmed by the Chinese business activity report, which covers big and largest enterprises. China's manufacturing PMI is likely to decrease amid the worsening epidemiological situation and tougher quarantine measures. Against the backdrop, we may see a decline in oil prices and lower demand for the Australian dollar, a currency of China's main supplier of raw materials. Notably, Australia is going to disclose its inflation figures just 1 hour before the publication of Chinese PMI data. Nevertheless, data from China will have a stronger influence on the Australian dollar. Thus, analysts foresee higher inflationary pressure amid the acceleration of the consumer price growth to 7.5% from 7.3%. On Wednesday, trading activity is expected to be high not only during the Asian-Pacific trading session, but also during the European and US trades. This could be explained by a large flow of macroeconomic data. Thus, during the European session, traders will be waiting for the Eurozone preliminary inflation figures. This report may prove the fact that data on Germany's economy reflects the overall situation. Expectations are the same. The consumer price growth may slacken, though very insignificantly. During the US trade, the ADP non-farm employment data will be the most important report that may affect the greenback and the stock market sentiment. As usual, the data is published before the US Labor Department report, which is due on Friday. While in the previous month the indicator showed a noticeable rise, in November the situation is likely to be the opposite. The fact is that the US employment growth is slackening. What's more, the US largest corporations have carried out massive layoffs. The next trading week is going to be full of important macroeconomic events, so do not miss our daily news reports to be always in touch with the latest events. And trade with profit. See you!